episode where we are discussing about candlestick patterns. In this episode, we are going to discuss about a candlestick pattern known as dark cloud. Dark cloud is opposite to piercing line. Similar to bearish engulfing, if you can see here, a dark cloud occurs when a red candle starts well above the green candle and it goes well below 50% of the green candle. There are a few things that you need to take care before taking a trade when a dark cloud occurs. First, there should be an uptrend going on. Second, the entry should be within the next 2 or 3 candles when a red candle closes well below the low of the green candle. The target would be within 10 to 12 candles and your next support. The stop loss would be the high of the red candle, the dark cloud red candle. We will look into an example. This is a chart of Avanti feed. If you can see, there was a nice uptrend going on, but at this point, exactly this point, you can see a dark cloud occurred here, and the next candle itself gave a closing to us, that is an entry to us, and you can see the price going down from 700s to 200s. You could have booked your profits over here, that is 600s, because there is your first immediate support. It broke that, so you could have waited for your next support, that is around 500s, and it broke that too, and your next support would have been around 300s. So this is dark cloud for you. I will see you in the next video. Cheers.